Hey guys, Dave with Moniology here. Hope everyone is having a wonderful weekend. This is the weekend market review for the weekend of January 27th and 28th, 2018, where we take a look at some of the most important sectors in the markets, those analyzing what's been happening, what's happening, and what likely will happen in the future. This gives us a better perspective on where to trade, what to avoid, and to see what's next. Let's take a look at what we've got going on in the markets today. So and I'm going to make a relatively quick video today, but we'll start with the 10-year U.S. Treasury yield. It's consolidating here around the 2.6 area, 2.7. It found support on the daily above that 60. Looks like it wants to head higher, and we firmly believe that, as you see here, there's some resistance at the 2.7 area, but it's being led by RSI. And we think that we may consolidate here for a while, but ultimately we think we're headed for that 3.1 area at some point this year. MACD's looking very strong. Stochastics look very good. There's no reason why this doesn't go much higher this year, aside from potentially stalling for a little bit of time to consolidate. On a monthly basis, well, here's why we're so confident. You see RSI, we're at the same point today as we were basically a couple of months ago, and yet RSI is positive right now. So that's positive divergence. That's precisely what you want to see. We're at more momentum today than we were when we were at 2.9, basically 3, several months ago, actually several years ago. Again, positive divergence suggests yields are moving higher, and that's you want to be long the inflation trade right now. Well, taking a look at gold. There's a lot of exuberance in gold from 1238 all the way to 1365 with very little pause in between. I think we're going to have some consolidation right now taking place, but nonetheless, 3 higher highs in RSI. We might pull back a little bit, but ultimately we're going to break out of this 1360 zone and likely going towards 1400 at some point this year. So you see here why I think that there's going to be a pullback. Well, 1362 was basically hit twice, but momentum this time around wasn't as strong as the previous time. That suggests that there's some needed energy to be recaptured, and that means we might pull back either in time or in price for the next several weeks. But look at this volume. This is probably the biggest volume week of the year, or certainly of the last 2 years. Now, taking a look at gold monthly, this is unequivocal. We've been pointing this out for a long time. Gold is breaking out of a multi-year downtrend and in the midst of a multi-year bull trend. So basically, I think it's called a, well, I don't know what the terminology is so well, but it's a secular bull market, and then in between this is a bear market. Anyway, bottom line is this looks good, and it looks like it's just beginning. High yield continues to seem like it wants to deteriorate lower, but every time I think that it does, it seems like it bounces back and makes new highs. So I can't seem to get a grasp on this market, to be honest with you. We continue to seeing negative divergence here as we see higher prices. Momentum continues to diverge lower, but the MACDs are starting to curl higher. Does this mean that we're moving higher? We'll see. Stay tuned. On a monthly basis, well, we closed the month basically higher after being lower for the most of the month. And we've got a couple more days, but this thing does not want to go lower. So you see that MACDs were curling, and so long as this month is positive, it looks like we might curl higher here for another leg run higher. We'll see. Taking a look at crude oil. Crude oil bounced very firmly off that 65 support zone, and on the daily, it seems like it wants to did not want to roll over on the MACDs, wants to start going back higher. So it's possible we might have another push higher in crude oil. Although, when you look on the weekly, I mean, it looks fantastic. We've been very bullish for a long time. I've suggested that the probability is increasing that we're going to get a pullback with the amount of speculation on the long side. It might be time for a pullback here, but by the same token, it's breaking out, and momentum is slightly negative here versus when we hit that 65 zone. That's not much of a sample size yet. MACD's starting to curl back higher, so this is something definitely to watch. Crude oil monthly, without question, we've broken out of this inverse head and shoulders pattern. I still would like to see a little consolidation, maybe a bullish flag here, cup and handle for a little while to shake out some of the speculative longs. NASDAQ looks very good. It's extremely overbought, as you'll see across the board. NASDAQ weekly, NASDAQ monthly, Russell. Russell's the one index that's not seemingly overbought on every time frame. Weekly, it's exceptionally overbought. Monthly is exceptionally overbought. S&P is as overbought as it's ever been in the history of the market. I'm not joking. This is actually the fact. At some point, this is going to revert back to the mean, and when it does, it's going to be ugly. But until then, ride the trend if you're long. But I'm not going to touch this with a 10-foot pole. The dollar is basically as oversold as you can possibly get on the daily. So looking at this from a weekly time point, we almost hit our 87.5 target. We'll see what happens here. But ultimately, the dollar looks like it wants to head lower before it heads higher. So this is that 87.50 time point. We'll see whether this can hold and manifest in a bounce, or ultimately heads lower towards that 80 zone in the coming weeks. Volatility, it's kind of consolidating lower, still above the 50 RSI in the daily. So stay tuned there. I'll point out what I'm looking at in volatility here. On the weekly, it seems like it's starting to break out on the MACDs, on the RSI. Something to keep an eye out for, especially when you see this. Right here, this is the most important thing you'll see today in this particular chart list. The MACDs look like they're starting to cross zero on the monthly. And at the same time creating this bullish wedge pattern. Now, it's no guarantee that this is going to break out, but certainly if MACDs cross, there might develop some positive momentum for volatility in the markets, especially considering how overbought we are here. And here's an example of the world stocks. Anyway, guys, overall inflation is creeping up. Oil, gold, interest rates all look good. The markets are exceptionally overbought, but no reason why they can't go on and continue moving higher. Bottom line is that's all we see right now. And for those new to our videos, please, if you like the work that we do, please show us a token of your support by clicking on the link in the show notes. We're on Patreon. What this allows us to do is to create better quality videos, better content for you guys, the viewers, and hopefully educate and continue to help you make money in the markets every day. Thanks, guys, for your support. Have yourselves a wonderful week, and good luck.